Hello, everyone. Great to see you today. So, obviously, we are through the crypto winters, right? And there is a lot of uncertainty. And I think what's very important is that we look through what's the next wave, the key theme that is going to drive the next wave of innovation, right? And especially in terms of institutional adoption, we are very positive on the future of what's going to happen. And we have identified actually 5 themes that are really going to drive the adoption going forward, right? One is really around the diversity of the token assets. What we think is, if you think 5 years ago, there was only Bitcoin, and then smart contract came, and then NFT came. The next wave is going to be real life assets, real world things that are going to be illiquid and not compatible on the traditional financial sector. That's one. Second, we think that people will use it instead of traditional financial institutions, especially in emerging markets. In some of those markets, actually, crypto penetration is going to be higher than the TradFi penetration. So real life usage is starting. Third, ETH and the merge has created actually the first productive assets at large scale from asset management point of view. That will mean that more than 10 billion of yield is going to be distributed to asset managers. So that will see a lot of flow from institutional funds. Fourth, we really also see the convergence of TradFi, CeFi, and DeFi. What it really means is it's going mainstreams. It's really no one cares about small communities anymore. Everyone is moving to the space. Last one, where we see most of the investor money going in, is really around sustainable business model. What we're seeing is people don't care anymore about how big is the TAM. It's still important, but the second question is it sustainable? Let's go through some of those trends one by one. What's very interesting is if you look at the diversity of crypto assets, right? When you look at 5 years ago, it was just Bitcoin and all the Bitcoin forks. And the whole thesis was replacing money, right? But then the innovation came through. There was DeFi that came, dApps, NFT, right? Smart contracts. And all of those created much more diversification, right? Going forward, what we're going to see is much more real-world assets. Specifically, tokenizing illiquid things that are not supported by the traditional financial system. Similarly, stablecoins are also something we are very positive about. It's essentially the fundamentals to replace inefficient traditional financial systems. For tokenizing assets, right, what we are really the most bullish about is illiquid assets. Why? It's just because non-liquid assets are the one that traditional financial system cannot solve. It's very hard to replace the NASDAQ, right? But what you can do is to actually tap into the whole lot of assets, which could be real estate, private debt, private equity, which are not addressed by the NASDAQ. So how do you basically tokenize that is actually one very, very important point, right? And tokenization of those assets will provide clear opportunities, very different value proposition, right? It could be one, fractionalize. Fractionalizing means allowing private and smaller individuals to purchase the assets, such as LP of private debt or private equity. But it will also be tokenized to create more liquidity. We're thinking about arts. We're thinking about IP rights. We're thinking about digital or physical IP, bonds. All of those could be tokenized, and we believe that this will be the next wave of innovation. Similarly, on the second trend, it's all about replacing the financial system and how is it more efficient. Look, everyone has talked about who is actually using it on a day-to-day basis. So on this chart, you see on 2 axes. One is the penetration of banking. And as you know, it's especially low in developing countries because of the inefficiency. The second axis is the crypto penetration. What's really interesting is that in some of those countries, such as Vietnam, Philippines, and Nigeria, crypto penetration is starting to be at the same level as banking penetration. So what we believe is the replacement of TradFi and the use of crypto for day-to-day usage will start with the emerging markets. That will be very, very important. Second, it's not just about usage. It's about how do you create value on day-to-day basis. And we've all talked a lot about remittance, how inefficient it is. But not only remittance. It could be about loans, especially in those like high interest area, right? It could be about wealth management. It could be actually around creating a pool of workforce, right? And bridging the supply and demand of workforce between emerging and developed world. It could also be about payments. All of those are super inefficient in some of those geography. And crypto is going to disrupt all of that. Third point, which is very important, is from an asset management point of view, is going to be the catalyst of creating an asset class adopted by traditional asset managers, right? And that is because it actually inherently has huge supply, right? So it's actually the second largest crypto asset. And then that asset, we can look at it as a smart contract. But the way a lot of asset managers look at it too, it's actually becoming a deflationary productive asset. And that productive asset used to generate close to 10 billion per year, right? 10 billion per year, it's more profitable than half of the S&P company in this world. It's actually a huge asset class, right? And those 10 billion historically was used to pay the crypto miners. And you needed to have hardware. You needed to have specific technical skills in order to capture these fees. But now it is accessible to anybody. It is accessible to anybody who can stake, which means that if you have money and you find a professional staking delegator, which happens all the time, right, you can capture this yield, right? And it's becoming actually one of the most interesting things that the asset managers are talking about. And there is much more infrastructure kept to that. The second thing which is important is, from a mandate point of view, a lot of asset managers don't want to invest in things that are not ESG compliant. It's very difficult for them. They have risk committee, investment committee, etc. The fact that it become an ESG compliant asset is also going to be a very big catalyst. So from adoption point of view, right, from asset management point of view, we believe that actually there is a huge room. And the first catalyst of that is going to be the POS ETH. Third thing we're observing is, what's the sign of mainstream adoption? Mainstream adoption is when it's not a niche technology anymore. It's when all the institutions and all the users are using it on day-to-day basis without realizing they're using it on day-to-day basis. It's not about CeFi has a CeFi community, DeFi has a DeFi community, and you have this old dinosaur and the TradFi guy. What we're observing is that the frontiers are becoming blurry. For instance, TradFi business are actually being taken more and more by the crypto community, right? As if you can tokenize an asset, why can't you tokenize stocks? Why can't you tokenize equity? Why can't you tokenize bonds? If you start to do that and you are cheaper, more efficient, and have instant settlement, then you can actually replace some of the systems, right? So there is a risk of TradFi players being eaten by DeFi players on their own plate. Similarly, what we're seeing is the Robinhood and the Revolut of the world, the fintech players, are also trying to have a crypto offering. And it used to be very simple. It used to just be crypto exposure, right? But you cannot withdraw. It's not a real asset. You cannot buy NFT with it. But more and more, the next step, they will build real crypto wallet on that. They will be able to exchange coins between your wallet and MetaMask, right? And that's going to create another pool of users. Lastly, we also see TradFi players moving to the space, right? Obviously, they have more concern about AML and KYC, but if you look at the number of investment that someone like Goldman, Fidelity, or Morgan Stanley are making in the space, especially on the custodian security space, is actually quite impressive, right? And a lot of those use cases are already deployed on a 2B basis, not consumer-facing, but really trying to disintermediate the inefficient system that was built in the 70s. So that's also something that is going to be very interesting to watch. Lastly, when we think about the future, right, and what will stick through the bear market, the winter, what's going to be really, really important? What we believe is really the quality of the business and the sustainability of those business models. People ultimately are very, very passionate about the trend, but ultimately, two questions will come. One, is it big enough? Second, can it make money? Third, is it scalable? And a lot of those solutions through the winter will not survive because it's unsustainable, or is it because it doesn't have the right infrastructure, right? So what we're really excited about, there are a few things over there, right? We can talk a lot about those, but specifically, if I pick some of those, DeFi with sustainable yield is something that we find it very interesting, especially when interest rates are rising, and basically you also see a lot of those unsustainable things collapsing. What you will see is the one who survive will be sustainable and not only used among the small community of crypto users, but also for a larger audience. The second thing we're really excited about is AAA games coming to the space, right? And we see a lot of traction. Everyone has a secret studio somewhere, either investing or building NFT for AAA games, right? And this is just inherent to the game cycle, because creating a game is hard. It's like creating a movie. It takes years. But crypto is just something that is a few years old. So how can you expect very AAA game at the moment catching up with those mature studios? So the day AAA game was married with game items with NFT, that would be something revolutionary, right? Other thing that we're really excited about is the application of this technology for real life use, right? I won't name all of those, but that include, social network. That include IP product, art, music, but also everything around personal identity, right? Today, your data are not monetized, as everybody knows, but the day you can own it and start potentially either monetizing or keeping it by yourself is going to be also revolutionary, right? So in conclusion, I think we're going through tough times, right? Liquidity is not going good, market is not looking good. But if you really look at the fundamentals and the emerging use cases that all industry players are building, so it could be crypto players, fintech, or TradFi players, you will see that the usage and the potential for disintermediation is just tremendous. So let's go through it, and we'll come up stronger out of the winter. Thank you very much.